Hi class, today's lesson will be Chapter 3, Problem 5B. I will be sharing an Excel screen with you today for Problem 5B. We're going to be Reese Financial Services Company, which specializes in appliance repair services. It is owned and operated by Joni Reese, and Reese Financial Accounting Services clerk has prepared the following unadjusted trial balance at July 31st, 2019. So the unadjusted trial balance has already been prepared. And so what we're going to be doing today is we're going to be looking at adjusting entries and preparing them. And like we've done in past videos, I'm going to start by putting the adjusting entries in T accounts, and then we're going to copy from the T accounts into the journal. Remember, your T accounts are just tools that will help you to analyze transactions. When you're looking at the adjusting information, you can see here that they started with depreciation of a building, and that depreciation for the building for the year amounted to $6,400. So when we make adjusting entries, we want to record depreciation as the allocation of the cost of the building over the life of the building. In this chapter, they're going to give you the amounts for depreciation expense. You're not going to have to find them. And so the amount of the depreciation for that building for this year is $6,400. What you will have to do is create the adjusting journal entry and put it in the journal. But before we do that, we're going to analyze it through our T accounts. So I've drawn a T account here that represents the depreciation expense for the building. When we adjust the building for the amount of the depreciation expense, what's important is that you know that depreciation expense is an expense account, and that when you depreciate, every year that you depreciate at the end of the accounting period, we will debit the depreciation expense account because it is an expense account, and to increase expenses, we would debit. So my adjustment is for the amount of $6,400 that will be debited, put on the left side of the depreciation expense account. When you're preparing journal entries, you always have to have at least one debit and you have to have at least one credit. So the next type of a ledger account or the T account that I'm going to demonstrate to you, which T accounts represent ledger accounts. But T accounts are the tools that we put them in before we record them in the journal. And so I'm going to create a T account and I'm going to call it accumulated depreciation. And that accumulated depreciation is relating to the building account. So accumulated depreciation, what you need to know about that is that this is what we call a contra asset account. And a contra asset account increases on the credit side. Contra asset accounts increase on the opposite side of the account that they're offsetting. The account that we're offsetting is the actual building account, which is an asset account, but we're putting it into a new account that we call accumulated depreciation. accumulated depreciation has a balance that is opposite of an asset account. So it's always going to increase on the credit side. So in this T account here, what I've done first of all is I've copied the unadjusted trial balance amount. Let me see if I can get that to show up. Sorry about that. Okay. Well, I didn't want it to do that, so let me see if I can undo that. And what I'm trying to show you here is that this should be saying the unadjusted trial balance amount. Okay, so let me see. There we go. If I can get it to show up properly. All right, back to accumulated depreciation, which is a contra asset account, should always be increased on the credit side. And its normal balance will always be on the increase side, which is the credit side of this account. The unadjusted trial balance amount, I just copied from our ledger. Remember, your unadjusted trial balance amounts are ledger accounts. The ledger account balance is showing $62,850 before we have adjusted that account. So I just recorded that on the credit side, and then I added to it the adjustment of $6,400. What you're going to do is you're going to copy from your T accounts and place this into the journal. So we would start by debiting our depreciation expense, our building account. We're going to take this debit and we're going to copy it into the journal. So on the first line of the adjusting entries for the journal, I'm going to put my account title, depreciation expense building, and the amount is a debit amount is coming from the depreciation expense, the building account. The credit is to accumulated depreciation. So you're copying from the T account into your journal a credit for accumulated depreciation. The amount will go on the credit side of the journal at $6,400. Remember, once we have the entries journalized, we will copy into our ledger account this adjusting entry. So these T accounts can also represent your ledger accounts. They're not formal ledger accounts. Your formal ledger accounts are in your ledger, which is the second book that we place our transactions in. So the journal's the first place where we record transactions. Then we're going to copy from here to another book that we call the ledger. And then you'll rebalance the ledger accounts. The rebalanced ledger account for accumulated depreciation is going to be $69,250. And so this T account, which is a tool here that I've created, can also represent your ledger account. Your ledger account had a previous balance that was brought forward of $62,850. Because of this adjusting entry, we need to add $6,400 to that account. When I add it to the previous account balance, its new balance will be $69,250. And this is what would be reflected in your adjusted trial balance that you're going to prepare next. So you would make an adjusting trial balance, and for the accumulated depreciation for the building, the credit balance is going to come from that ledger account. So even though these are not formal ledger accounts, they can represent ledger accounts. These are your T accounts that will help you to get the journal entry correct. So we start by creating our adjusting entry and copying it to the journal. Once it is journalized, the formal steps of the accounting cycle would be, once it's journalized, you would copy it from here into its formal ledger. And then from the formal ledger, we would copy into the adjusted trial balance, which we'll prepare last. So the next adjusting entry just happens to be for depreciation again, but this time it was on our equipment account. Your equipment account is the second plant asset that you will be depreciating in this problem. Remember, plant assets are assets that you intend to use for a longer period of time than 1 year. And because we intend to use those assets, because we are using up the asset or consuming the asset, we are creating a depreciation expense. The amount of the depreciation expense on the equipment is going to be $2,800. So I created a T account and I called it depreciation expense equipment. And I'm going to debit that equipment, excuse me, not equipment, but I'm going to debit the depreciation expense on the equipment for $2,800. Now, I want to emphasize to you that the account equipment is an asset account. Depreciation expense on the equipment is a separate account called depreciation expense. Accumulated depreciation on the equipment is a separate account. It is a contra asset account, so it's going to have a credit balance. Notice I put in my T account the unadjusted trial balance amount that came from our ledger, which was $17,650. I just wrote that in so that you would know that this $2,800 additional amount is going to add to our previous balance in the accumulated depreciation account. So we had to update the accumulated depreciation amount to get it to the correct balance at the end of this period. The correct balance at the end of this period is $20,450. We want to reflect that correct balance in our new adjusted trial balance that we're going to prepare so that our financial statements will be prepared with the correct amount of their ledger account balances. So for the adjusting entry, I debit depreciation expense and I credit accumulated depreciation. I copied that into my journal, and then from my journal, I would copy to my ledger. A term that we use for that copying is posting to the ledger. So I would post to the ledger these balances from the journal, and then I will rebalance my ledger accounts so that they have the correct balance in them. That new balance will become the adjusted trial balance amount so that we can prepare financial statements from the adjusted trial balance. The third type of adjusting entry is for accrued salaries and wages. Remember, there are two types of accruals. There are accrued expenses and there are accrued revenues. This fits the definition of an accrued expense. You have to know the definition of accrued expense. The definition of accrued expense is an expense that we have incurred during this accounting period that we have not recorded yet, and we owe it. So what's happened here is our employees have worked for us during this accounting period, and we owe them $900. It's $900 that's going to be an expense in this accounting period. So we'll have to bring the salary and wages expense up to date. The unadjusted trial balance was showing $56,850. This reflects the balance in the general ledger account, salary and wages expense before we made the adjustment. We're going to add $900 to our expense account because of this adjustment. Our salary and wages expense is going to be debited in our journal. Notice we copy the 900 as a debit to our journal entry. The salary and wages payable did not have an unadjusted trial balance to work with. But we know because our employees have worked for us, but we haven't paid them the $900 yet, we owe them $900. So my adjusting entry is a debit to salary and wages expense and a credit to salary and wages payable. We copied that into the journal. And then from the journal, we would copy to our ledger. And we would rebalance our ledger accounts and end up preparing an adjusted trial balance. When we rebalance the ledger account for salaries, you can see that the adjustment is added to the unadjusted trial balance amount to get the adjusted trial balance amount. For the next transaction, we had some unexpired insurance that was available to us for $1,500. And so what that means to us is that we've got some insurance that's left over. We need to know what we bought that insurance for. And so we're going to refer back to the prepaid insurance account and see that it has a balance of $6,000 to start with. So I've created a T account and I put the beginning balance in that came from the unadjusted trial balance amount. What our adjusting entry additional information told us is that we have some unexpired insurance. Unexpired means we have some insurance left over at the end of the period. The balance at the end of the period is now $1,500. So the difference between the balance at the end of the period and what it was previously is $4,500. That's our adjustment that we would make to our prepaid insurance account. Our prepaid insurance is a type of deferred expense. A deferred expense is another word for prepaid accounts. So if we had prepaid insurance or prepaid supplies or prepaid rent,